guys, welcome to my channel. I'm Michaela from My Property Accountant, and today we're going to be discussing the 5 biggest VAT mistakes I see Airbnb hosts in the UK making. So I've had a few client calls and seen a few mistakes happen, and these can be big companies with quite a few properties or just once off. So I thought I'd just make this video to help everyone out. What happens when you are making a mistake with that? So you either are not compliant with HMRC, which obviously isn't great. Maybe you can get a fine or penalty, maybe you can get an investigation and they'll find something that's wrong and you'll have to pay more tax than you expected, or maybe you're not tax efficient, which is really bad. You're paying too much to HMRC, so we really want to fix that. So I'm going to go over the 5 ways that we can do this. The first mistake I see being made is new businesses that register for VAT too early. So I think people get really excited, they've just opened their business and they have all these expenses, and they find out you can claim 20% input VAT on your expenses, which you would think is a really great thing, but in most cases it isn't. And why it's not a good thing is because you have to pay 20% of your income from Airbnb to HMRC, so it doesn't actually work out. What happens is a lot of your expenses you can't claim input VAT on it, and the reason for this is because either it's exempt, it's a zero-rated supply, or in some cases your supplier is not VAT registered, so you can't actually claim that 20%. So when you're business to business, your customer can also claim that 20% input VAT as their expense. But when you are running an Airbnb business, most of your customers are going to be normal consumers, they're holiday makers, and they're not going to claim that 20% as a business expense. The other reason is you now have chosen the perfect price for your Airbnb property. You've decided that that £100 is the right price per night based on Price Labs or whatever other research you've done. You put a lot of effort to find that price. You know that it can't go to another price too low, you're not making enough money, too high, and you're just going to be eaten up by competitors. Now, when you VAT registered, you can't charge £120 because that is too high of a price. So you essentially need to absorb that VAT output that you're going to pay to HMRC. You are going to get £83, and then the other 17 is going to go to HMRC. You'll want to claim input VAT on all your expenses, but you'll find that you actually can't claim 20% on all your expenses. So for instance, for mortgage interest, you can't claim 20% input VAT. Ooh. And then another big one is probably your cleaning expenses. You might have a cleaner and they aren't VAT registered, so you'll find that you actually can't claim input VAT on those expenses, and those are maybe 2 of your biggest expenses, and there'll be other suppliers that aren't VAT registered, so it doesn't really work out. You aren't claiming 20% and then you charging out 20%. And now the second mistake I see Airbnb hosts making when it comes to VAT is not actually registering for VAT. Now this is the other flip side of that. So I see there's 2 kind of reasons this happen. Is the first one is someone just isn't tracking the income, they're focusing on their operations, they maybe don't have a proper bookkeeping system, and before they know it they are at the 85k mark. And the second reason that I see this happen is they actually just don't know what the threshold is when they have to register for VAT. So just so you know, you have to register for VAT if you earn over 85k in turnover. So some people only speak to their accountant once a year when their tax return is due, and then they find that they've reached that 85k threshold long ago and they should have registered for VAT like 6 months ago, but they haven't, and they just didn't know what the threshold is. So you definitely want to make sure that you are chatting to your accountant regularly to make sure that you're compliant with things. Kind of related to this is people think that they just want to earn 80k in a financial year, then they should stop trading for that financial year, and then they can carry on trading the next financial year and stay under the VAT threshold. And it actually doesn't work like that. It's on a rolling basis. So if you look at the last 12 months, if you've made over 85k, you'll have to register for VAT. So you have 30 days in which to register for VAT, and then after that, when you're registered, you can start charging VAT. So the third mistake people are making is where you can save quite a bit on VAT that you didn't maybe realize that you could save on VAT. So when you have long-term stays, this is classed as stays over 28 days. You don't have to charge VAT, that 20% VAT, on the accommodation portion of the stay. So if you have cleaning fees and other fees, that still gets VAT, but it's just the accommodation portion that you don't need to charge VAT for. And you need to adjust for this, and I find that some hosts don't actually adjust for this, or some accountants don't even realize what portion this relates to. They aren't getting statements or anything like that from Airbnb. Speak to your accountant and make sure that they're adjusting this on your VAT returns. So the fourth mistake that I find people making when it comes to VAT is a really important one, and I think a lot of people don't even know this exists, and I also find some accountants don't even suggest this to their clients, mostly because they're generalist accountants, and usually the scheme doesn't really work out better for most businesses, but for Airbnb it does sometimes work out. And what this is the flat rate scheme. So basically you can pay 10.5% on your revenue instead of doing the input VAT on expenses of 20% and output VAT of 20% of income. It sometimes does work out in certain circumstances, and sometimes it doesn't. So you'll have to look at your particular scenario. You'll find a lot of your expenses you can't claim input VAT on, like what I explained earlier. So you'll find this is beneficial for you. So I'll just go through an example where we can save about $3,500 for this particular client had they, London sirens, the joys. So in this scenario, this client is earning $100,000 worth of income, and using the normal scheme, they can claim input and output VAT on certain expenses. So in this scenario, obviously the income is $16,667 worth of input VAT, and they can offset this by their expenses. So you'll find your mortgage, you can't offset, you can't claim input VAT for that. In this particular scenario, their cleaner isn't VAT registered, so they can't claim input VAT for that. So those are two really big expenses, as you'll know, in your business that you can't claim input VAT for. So in this scenario, utilities and other expenses, you can claim input VAT, and your property management, if you have that, you can claim input VAT. So all in all, if they just had the normal rate scheme, they would be paying $13,000 worth of VAT. If we move over to the flat rate scheme, they're just paying on their turnover. It's a little bit more simple, a lot less admin, which is also really great for you. It's also time saver besides saving you money. You're just going to pay $9,500 in tax. So this is then saving you £3,438, just like that. And it's a simpler method, so it's really great. But there is some criteria that you have to meet. Not everyone can enter the flat rate scheme, so you'll have to consider the criteria. I'm just going to go over the main ones, but there's quite a lot of exclusions that you might fall into, and you can't use the flat rate scheme. You can only enter the scheme if your revenue is below $1,500, and you can stay in the scheme until your revenue goes to $2,300. So that's really great. If you're below that threshold, you can benefit from the scheme. The other thing to consider is the scheme won't work if you have a mix of different properties, and also if you're part of the VAT group. The other criteria that some businesses don't meet is that you need to have costs of goods of either £1,000 or 2% of revenue. So some Airbnb hosts might not have this, but if you're someone who maybe supplies different welcome packs in the form of tea and coffee and some snacks, or you have cleaning supplies, anything you can think of, costs of goods that are consumable that you use in your Airbnb properties, these probably will qualify, and you can use the flat rate scheme. So the final mistake I see hosts making is a bit of a compliance issue, and it can be a problem because you're essentially reporting the incorrect amount of revenue. So a lot of hosts think that the income that is coming into their bank account is the actual revenue, and that's not the case at all. It's what the client is paying you, the customer is paying you. That is your actual revenue. It's not the bank statement amount. And the reason for this is that these platforms like Airbnb and Booking.com take a portion of their fees before they pay you. This could be 3% to 15% depending on what platform you're using. Now that should be an expense, and you can claim input VAT on that, that's fine. But the full output VAT amount you should be paying to HMRC is based on what the customer is actually paying you. So you could actually be above the threshold without even knowing about it, which is a real problem. The second point is that you're actually reporting incorrect revenue, which is wrong. What I find is sometimes people will get a bookkeeper or maybe an accountant who doesn't understand these platforms, and they're just seeing something on the bank statement, they're reconciling the bank statement quickly, and they don't really understand how the platforms work. So it's really important that you go in and check that your accountant is claiming the right revenue. Thanks for listening, guys. I really appreciate it. Please subscribe for more content like this and give my video a like. It really helps out the algorithm. I'm going to leave a link below to my ebook. It's the 7 biggest ways that serviced accommodation and Airbnb hosts can save on tax, and it may help you pay 0% tax. There are some strategies in there, so really give it a read. I put a lot of effort into it. And then I'm also going to leave my link below. I'm a chartered accountant. We specialize in Airbnb hosts and property investors, and we do all the normal accounting, tax, bookkeeping, management account services that you might need, and we are taking on new clients at the moment. Or if you just have a question and want to chat, you can book a call below. I'd love to chat with you. I'm always free for a chat. Thanks guys, have a good day. Bye.